The problem that we've seen most recently is that we're reaping the consequences of lighter regulation. When Chair Powell started leading the deregulatory movement in the Federal Reserve and getting the regulators to lighten up, the consequence is problems get missed. The oversight becomes lighter. The stress tests during Powell's term have become easier. They've become less frequent. And that means that problems that bubble up, problems because the executives want to boost those profits, and the best way to boost those profits, take on a little more risk and a little more risk, that those problems don't get tamped out early.
Is that why you've asked Chair Powell to recuse himself from this review?
Yes. For this review to have any credibility at all, Chair Powell has to recuse himself. He is the one who not only presided over the Fed, who not only came to Congress and answered questions from me and from others about this deregulatory move, but actually led it. And it's important that while we're examining what went wrong, that Chair Powell take a step back and let Michael Barr, who is the new vice chair, who was not there during all of this, let him conduct an independent investigation. That's the only way we can have some confidence in it.
Senator, what's your message to the over a dozen members of your own party, some of whom are still in office, who voted in 2018 to roll back to soften some of these bank regulations?
We need to learn from what has just happened with these banks and go forward by tightening the regulations. It's just that simple. When we roll back regulations so that bank executives can use these banks to boost their profits, to boost their own salaries, to get big bonuses, they are doing it by taking on more risk. Banking should be boring, and we have a chance here in Congress to make banking more boring again. We should take it now.
Do you consider what the administration did to be a bailout for the Signature Bank and SVB?
You know, the administration is in a really tough spot because of the failure of the regulators and failure of oversight. I think they did the right thing by saying that these small businesses, these nonprofits, who don't evaluate the quality of a bank, they put their money in the bank and they expect it to be there when they're trying to make payroll or pay the utility bills. I think that the government was right to step in. Now, as for the really big depositors, the ones who put in $1 billion, they're not like ordinary depositors. They're much more like investors. And I think they should have been treated differently.
But I guess it begs the question, does this mean that every deposit is going to be protected by the government in every bank?
Well, that is certainly what has happened in the two that have failed, and they've set up a facility to make certain that there will be adequate money for all of the depositors going forward, at least through this period of crisis.
We gotta go. Thank you.
Senator, do you have confidence in Fed Chair Powell?
No. I think I've made that pretty clear. I opposed him when he was renominated, and I opposed him for specifically the reason that he was too light on regulations. I said at the time, I thought it was dangerous to have someone like Powell, who was willing to deregulate the banks, in the position as the head of the Fed. And I think some of that danger has now shown itself right out in public.
We gotta go. Thank you.
Senator.
Thanks, Senator.